Hi, good morning, good afternoon, good evening, wherever you are around the world. Welcome back to Family and Finance. My name is Rose Joshua. So we're going to continue our conversation on RRSP, on investments and saving for your retirement. So in Canada, I'm going to just focus on Canada for this conversation. Um, there are several advantages that you have for having your RRSP over just saving in a TFSA. And the reason I'm actually having this conversation with you now is because several people have asked me, oh, or have said to me, oh, I don't like RRSP because of the tax. So, because as humans, we don't like paying tax. We are tax. We are allergic to tax. But a lot of people don't understand the role that RRSPs play, with respect to tax. So if you have a tax-free savings account, it sounds really, how would I say, it sounds like it's the best way to go because it's tax-free, but it's not tax-free with any advantage over RRSPs. As a matter of fact, with respect to taxes, RRSPs, which is a registered retirement savings plan, and TFSA are literally the same when it comes to balancing your taxes. In terms of numbers, they are numerically identical. However, they work differently from different ends of the tax. In a tax-free savings account, when you invest $1,000, it is $1,000 post-tax. You already paid tax on your income or source of the money before you invested it. So you invest $1,000 post-tax. And because it's a tax-free savings account, you cannot go back to your accountant and say, okay, let's make this tax deductible. So it is not tax deductible, meaning that there's no tax rebate or tax refund or income tax deduction that's done because of your TFSA. So when you invest your $1,000 in a tax-free savings account, it is your $1,000. Okay? So down the road, if you withdraw that $1,000, you withdraw it tax-free because you invested it tax paid and then you withdraw it tax-free. So either way, you paid your tax on that $1,000 before you invested it. Okay? Now, for an RRSP, when you invest your $1,000, the government says, okay, we're going to assume that this is pre-tax. So even though you had paid your tax before you invested the 1,000, what the government does then is the 1,000 in an RRSP is tax deductible. What that means is that they deduct the tax component of the 1,000 from your taxable income. So walk with me here. So let's say your $1,000, you are in a 30% tax bracket. 30% of the $1,000 is $300. So when you invest your 1,000, you would get a $300 tax deduction, meaning that they reduce your taxable income by $300. Are you hearing? Are you hearing me? So you get a $300 tax deduction. No, they reduce your taxable income by $1,000. Let me backtrack. They reduce your taxable income by $1,000, which is equivalent to $300 tax deduction. So you invest 1,000 in an RRSP, you get $300. That particular, I'm assuming 30% marginal tax rate, MTR. You invest $1,000 in an RRSP, you get $300 tax deduction. You invest $1,000 in a TFSA, you get nothing, no tax deduction. Now, what happens at withdrawal time? Okay, remember in an RRSP, they gave you back money, $300. In a TFSA, they didn't give you any money. Now, what happens at withdrawal? If you go in that RRSP and you withdraw your $1,000, then they tax you the $300. You withdraw $1,000 from that RRSP. Let's say we're assuming still the same 30%. They tax you the $300 at withdrawal. So the net effect is they give you $300 at deposit. They tax you $300 at withdrawal. So the net effect is exactly numerically the same. However, RRSP has a major advantage, two major advantages. And this is where I'm responding to some of the questions I'm getting from friends and family everywhere around Canada. RRSP has two major advantages over and above TFSA. The first advantage is the numerical advantage of this. When you turn 72, or by December 31st of the year you turn 71, the RRSP becomes a registered retirement income fund. So it's a self-funded income pension, self-funded pension. What happens then is that you are retired. So remember that when you're working, your tax bracket is higher than when you're retired. So let's say you retire and then your tax bracket reduces to 20%. That $1,000 that you put in the RRSP, if you withdraw that $1,000 when your tax bracket has dropped, then you're not paying $300, you're now paying $200. So as a matter of fact, in an RRSP, if you keep your RRSP till the end part of the game when you're retired, in your RRSP, you tend to keep more money to yourself because your tax bracket is lower at retirement. Got it? So I would recommend, if you have not maxed out your RRSP, do so, because that's really where the money is. Your money lasts longer for you in an RRSP. Okay, that's number one. Number two advantage that the RRSP has over a TFSA is the psychological advantage. Let me explain. You know how people are just afraid of taxes? Every time you mention tax, they jump, right? Which shouldn't be, because we're blessed in Canada. We have lots of good benefits. The roads are good. You can have free healthcare. Anyway, I digress. A lot of people are afraid of taxes. So in an RRSP, your money is psychologically protected. Because if you put your money in an RRSP and somebody says, oh, there's an emergency, my fridge broke, so you're not going to go into your RRSP to take money for that fridge. Why? Because you're afraid of taxes. If you don't take the money out for qualified reasons, you get taxed. So because you're hesitant to get taxed, you don't go carelessly into your RRSP. However, the tax-free savings account is exposed. Because it's not taxed, people feel psychologically they can go touch it anyhow. And I've seen a lot of my clients who have a TFSA, one tiny emergency, they say, oh, I want money from my TFSA. One small emergency, oh, I want money from my TFSA. But they don't do that with the RRSP. Why? Because the TFSA, because we psychologically think, oh, no tax, I can go take money anytime. So using your RRSP to save for retirement is a safer and in the long run, better way to save for retirement than your TFSA. So what you want to do is you want to max out first, max out your RRSP before you now start, trying to max out your TFSA. A lot of people rather use the TFSA as an emergency fund because it's easy to go in, just take money during emergencies, but don't use it as your primary vehicle for your retirement because your RRSP is superior to the TFSA. I hope I hope that was a good, I hope that was um, that explanation is well understood. If you have any further questions on your RRSP, again, remember this is RRSP season. Give me a call, 780-680-1334. Anywhere in Canada, let's max out whatever you can save in this RRSP season. Okay? God bless you. I hope that was helpful. We'll talk again next time. Rose Joshua, if this is helpful, please share this with your friends and family. And remember to subscribe, like, and share. Okay? All right. God bless you. Bye now.